Hey everyone, and welcome. You ever get that feeling that there's a whole other stock market out there? One that moves in the shadows where massive deals happen in the blink of an eye? Well, today, we're pulling back that curtain. We're going to talk about block deals, the high-stakes game that's usually reserved for the market's biggest players. You see headlines like this flash across your screen all the time, right? A number so big, it's kind of hard to wrap your head around it. 1,200 crore rupees in one single transaction. It's a move that absolutely makes waves, but it all happens behind a sort of semi-closed door. And that's the real question, isn't it? When you see these giants making billion rupee moves, should you be paying attention? The short answer is a resounding yes. And this explainer right here is your guide to understanding not just what they're doing, but maybe even get a hint as to why. Okay, let's get right into it. What in the world is a block deal? It's not just some big trade. It's a very specific, regulated event that has its own set of rules and, you won't believe this, a surprisingly short window of opportunity. So think of it like this. Two huge players, let's say a big mutual fund and maybe an insurance company, they privately agree on a price for a massive chunk of shares before the trade even hits the market. Then they just use the stock exchange to make the deal official. This whole process is designed to stop them from causing these wild, sudden price swings that would happen if they just dumped a huge order onto the open market for everyone to see. And when I say massive, I am not kidding. For a trade to even be considered a block deal, it has to hit a minimum value. And that minimum is 10 crore rupees. Yeah, anything less than that, it's just a regular trade like any other. This 10 crore rupee floor is what separates the everyday trades from the institutional level moves. It's basically the entry ticket to an exclusive club, one that's reserved for players like mutual funds, foreign institutional investors, and company promoters. Now here's where it gets really fascinating, the timing. You can see it laid out here. These enormous market-moving deals don't just happen whenever. Nope, they are squeezed into this tiny 15-minute window right at the beginning of the trading day, from 9:15 a.m. to 9:30 a.m. That's it. It's a frantic, focused sprint to get these huge transactions done and dusted. All right, so we know what a block deal is, but more importantly, what's the so what for us, the retail investors? Well, these deals are incredibly valuable signals. They give us a rare peek into the mindset and the strategies of big institutional money. At its most basic level, it kind of boils down to this. A giant block buy often signals some serious conviction. A major player is betting big, and I mean big, on that company's future. On the other hand, a block sell can be a bit of a red flag. It might mean a major investor is losing faith, or they're strategically heading for the exit door. Now, theory is one thing, but let's look at a real-world example to see exactly how this plays out. We're going to dig into a major block deal that involved the tech behemoth Tencent and PB Fintech, which you probably know as the parent company of Policy Bazaar. So here's the setup. You've got Tencent, this huge Chinese tech company that was an early investor in PB Fintech. And they decide it's time to sell off a really significant chunk of their shares. This is exactly the kind of move that gets the whole market buzzing. And this chart really just shows you the sheer scale of the move. Tencent didn't just trim its position a little bit, it literally cut its stake in half. In one single decisive block deal, they went from owning 2.12% of the company all the way down to just 1.06%. But here's where the story gets really interesting. Who was on the other side of that deal? The one worth almost 700 crore rupees? Well, it wasn't just anybody. It was other massive institutions. Goldman Sachs, Mary Asset, DSP Mutual Fund. So while one giant was selling, a whole bunch of other giants saw an opportunity and were lining up to buy. And that brings us to such a critical point. A big block sell does not automatically mean a company is in trouble. You have to step back and ask why the big player is selling. The motivation behind the move is everything. It's really important to remember, a sell-off could be because of a loss of faith, absolutely. But it could also just be boring portfolio management. Maybe the fund is just rebalancing its assets, or perhaps it wants to reduce its overall exposure to the fintech sector. Or, and this is a big one, maybe they were an early investor, like Tencent, and they're simply cashing in on some very, very healthy profits. It's not always a panic button. Okay, so how do you take all of this and actually make it work for you? You can't jump into these deals yourself, but you can absolutely use the data they generate to become a savvier investor. Here's a simple little playbook for you.
First, track these deals. They're public information. You can find them on the websites of the big exchanges. The NSE, that's the National Stock Exchange, and the BSE. Second, always question the motive. Do a little digging. Was the seller an early bird just taking profits, or is this a sudden surprising exit? And third, and listen, this is the most important part, use this as just one data point in your research. Please never ever buy or sell a stock based on a block deal alone. This really is the key takeaway from all of this. Just blindly following the big money, the so-called smart money, can be a recipe for disaster. The real power here comes from understanding the context, figuring out the motivation, and seeing the bigger picture behind these massive flows of capital. So the next time you see one of those headlines about a multi-crore block deal, you won't just see a big, intimidating number. You'll see a signal, you'll see a question, and you'll see a starting point for your own research. The giants have played their hand. Now you've got the tools to help you decide yours.